Elizabeth, once again, we meet. Such a pleasure. Thank you.
I love being here. Thank you so much for inviting me back again so soon. I'm
Yes.
honored to spend time with you again.
So we just had a budget. I mean, let's bring it out there. Everyone's talking about it. Might as well talk about it now. What's
Okay.
your take on it? Because I mean, it's got to be some positive out of it. Should we talk about the positive of it? Is there some benefit of this, or are we going to just
Well,
jump in?
I think there's going to be a lot of talk about the negative perspective,
Yes,
so we can leave that for others. And just for clarification, we're we're talking about the changes to the capital gains and what that's going to look like for real estate investors.
precisely. So the capital gains. So yeah, that it's doesn't look too optimistic. It seems as if we're getting really kicked in the gut in on this one.
Yeah, and I think as investors who've been around for a long time, how long have you been investing now, Renee?
I've been investing for like 20 years or so, but I've been an entrepreneur, a business owner for 30 years. I've never really relied on the government. My take is leave me alone. I'll do my thing, you do your thing. I don't want anything. And I tend to try to focus on what I can control. And with the
Yeah.
government, I have no control. I'm not yet a candidate or a premier or I'm not working at the Ottawa yet. I don't have
Mhm.
any plans on that. So I really don't have any control over it. So I try to focus on what I do have control over. But still, having this is not a good sign for the economy overall moving forward in the next 5 years or so. What's your take on it?
I think it's definitely going to be challenging. And I think there's going to be, and we have to keep in mind this is broader than just the real estate scope, although typically that's the lens that we look at it.
Yep.
But it's going to be, all capital gains, specifically in corporations, increasing to 66%. And that is really significant. There, considering we're in a period where we've just come through terrible inflation and we're in recession now, and the economy needs stability, it needs the potential for growth, we need employment. To
Mhm.
me, this is a somewhat catastrophic move for the government to make. And I think you think like a lot of entrepreneurs, where we don't appreciate having people tell us what to do and how to do it and when to do it. And we like to be rewarded for our hard work. We believe that if we work hard, we should be able to control our future and control our destiny. And this move by the federal government is definitely not appreciated. And quite frankly, I will be surprised if it ends up happening, simply because I mean, look at the vacant home or the underutilized housing tax or
Yep.
whatever. Like, oh yeah, we're going to do this, and then they roll it back, and no, it's next year now. It's next year.
Waste of
Now we're
time,
going to
waste
roll
of
it back.
money,
Oh,
complete waste of money.
complete,
Oh, it's
absolute complete.
ludicrous.
And I'm trying to remember what stat or what information I saw the other day, and it was basically like the government made a change, and it was supposed to make this amount in revenue, and it made less than that, and it cost them more to implement the change than they actually made from the change that they made. It was basically something to do with taxation. I can't remember exactly what, but um, I feel like I don't want to waste too much time and energy on this right now, because who knows if it'll even happen, right?
Really? No. It takes into effect, doesn't it? Like, when does it take into effect?
I thought it was 2024, and then people were talking about 18 months. So then I'm like, maybe it's 2025.
Oh,
I should
I
go and
thought
look
it
it
was
up, actually.
immediate. I thought it was immediate because
No, no,
no.
no, no. It's June 25th, and then I just want to clarify the date. Um, which everybody's talking about it. Whoa, I just saw it on my Instagram here. Let me just go and look. Um,
One
but the
thing
reality, go
yeah.
ahead.
Well, one thing I would like to mention is that we got to take into account from a perspective on the world economy, like from a world perspective.
Mhm.
Canada, it's really basically next to the States. It's not much of a big player. What we provide to the world is um, a place to stay somewhere else, which is a bit relatively cheaper or better living than when they're where they're at the moment, such as maybe India. A lot of Indians are coming to Canada,
Mhm.
but it's a false preset because first of all, they arrive here, the rents are incredibly high
Yes.
relative to the United States. buying a house in Canada is so much more expensive, which doesn't make any sense because we've got more land. You'd think the houses would be a lot less. But the most importantly, with this new budget, it's telling the big players of the world Canada's no longer in business. This is not a
Yeah,
place to do business, and they're going to put their money elsewhere. So this is a long-term play, and it's going to have huge repercussions on the growth of Canada. I mean, we're relying on immigration to bring in funds, and basically, from my perspective, it's a lot of poor people coming in, and they're working
yes.
at, they're working at the
Two
big
and three jobs.
corporations. They're basically workers. They're working
Mhm.
at Tim Hortons. They're working at Home Depot. Great big corporations that need people, but they're not. Very few of them, very seldom, are actually entrepreneurs or business owners that come in to bring better opportunities for the whole economy.
Yeah. I agree with you. And a lot of the workers coming in, they're working 2 and 3 minimum wage jobs to be able to afford housing and food here. Because quite frankly, we already are taxed really significantly.
Yeah, I mean, sure, we got free healthcare. It's better living than where they're at, but it's overall, it's not a good sign. And some of them are going back because it's not working out. This illusion that they've jumped into uh, isn't working out. They're not getting the jobs that they want. And you're right, they're working minimum wage. This is not a sign of a strong economy or a recovering
Mhm.
economy. Yeah.
It's sad, and quite honestly, it's not the Canada that I was raised in.
Mm.
This is I have concern. I have really
Yeah.
grave concerns for Canada and what's going to happen here.
And there's the other part is that people with money are going to be leaving Canada. There's no reason for me to. I mean, it's family, sure, but then what about free healthcare? I'm told healthcare's sure you got to pay elsewhere, but it's a fraction of a cost, and it's better living potentially if you've got funds. So people with money will be leaving Canada. People with specialized education will be enticed to leave Canada. There's less reasons to stay in Canada.
Absolutely. And you look at somewhere like some of the states in the US that have very low taxes or very like the money that I'm paying right now in taxes, I can use that for my health care. In 2022, my health took a real hit, and I was looking at options. I was looking at going to the US and I was looking at going to Mexico for health care. And
Mm,
it was I think it was $10,000 in Tijuana for me to have an operation, and it was 25,000 in the US. But if I was living and working and making money in the US, I wouldn't have paid what I paid in taxes last
yeah,
year. I would have just put it into my healthcare, quite
yeah.
frankly.
And most often I'm told that these practitioners in other countries, in Thailand, Mexico, Costa Rica, they're
Turkey.
Canadian educated. They're American
Yeah.
educated. They know what they're doing. It's not like it's a third world country anymore. We've got these illusions what it is. The sure, Canada's a great place to live, but it's not if you've got funds and you've got money to invest in. We're being pushed away really.
Yeah. And quite frankly, my husband is working as an engineer. He's flying back and forth to the US quite often. There's really no reason for us to stay at this point.
Mm,
We're bringing money here and we're converting. He's making US money and we're converting everything to Canadian. And at this point, I'm starting to go, why are we doing this?
yeah. Okay. So when's your move? I know a lot of people who've moved to Mexico. They're happy there, and they're thinking. In fact, a couple of guys are like, I don't know if I go. Why don't go back? They're staying there. They're like, what about? Well, it doesn't matter after 6 months. They're like, doesn't matter. We're fine here. We're making funds here. What was what? Not that I'm looking to see how when you're going to leave, but more and more people are leaving. So what's your view on that?
Well, I mean, if we want to stay on the positive realm, which I
Yes.
try very
Yes.
hard to do.
Yes.
So the positive realm is every time a whole bunch of investors freak out and leave, then that typically creates tremendous opportunity for the people who stay.
Good
When
point.
your competition leaves, there's going to be opportunities that will arise. That being said, it doesn't mean that we want to be optimistic to the point where we are delusional and thinking that, the numbers will always work for living here, working here, having a business here. I think everybody has to kind of take a look at what their personal situation is and what it would look like. Take your taxes and the income you made in your business last year and run it through now and look at it being reflective of not just these changes right now, but where we think we're going to go in the future. We still own quite a few properties in Kirkland Lake, and our property tax increase this year was 9.8%.
Hmm.
And it's because the town council in the past mismanaged money significantly and put money where they shouldn't have. And, we're extremely optimistic about things like putting in, a multi-million dollar new pool and what that would mean for business in Kirkland Lake. And it didn't come to fruition. So it might be
Yeah,
10 point and 9.8 this year, but what's it going to be next year?
that's a good point. I find a lot of mismanaged money with government. Let's go back to the point. There is opportunity with change, of course, and I'm optimistic that with good accountants and smart people, we'll figure out a way of getting things by. But I mean, obviously, it's not encouraging when we understand that government is not on our side. They're trying to take more out of it. They've made mistakes. They're in dire need, so they're feeding off those business owners or those who are looking to for opportunities of making money. Basically, they're taking some more money out. And another thing that not to be on the negative side of things, but it seems as if all growth, all job growth in the past year or two have been in the public sector. It's not been in the private sector. It's not a good sign when government employment grows by 10 or 15%. This is becoming like a socialist country more and more. And then
Yeah.
there's a decrease in self-employment. There's a decrease in business owners because there's less reason. There's less. It's much more difficult to get things going.
Absolutely. And I would love to see stats on where the public sector increased because the last time I
Mm,
heard, they were hiring a whole bunch more people at CRA for enforcement activities.
great.
So it's
That's
not like it's, oh, we're hiring people to, support businesses, support small business. It's part of,
uh,
economic development. It's literally, we're hiring people to chase people down for the more money that we're charging them to be a Canadian.
okay. So let's we've gone off a lot off our chests. Now, what about the positive out of it? What about how it may look for down the road or for those who are staying in Canada who have funds, have private funds or have RSPs they want to lend out or they want to invest in real estate. There's still opportunities out there. So can you elaborate
There
on that?
There are, and I think one of the things that's contributed to this whole situation is integrity. And there's a lot of stuff going on in the world of real estate
Hmm.
right now, whether it's from the perspective of like we've got, multiple mortgage brokers across the country who have borrowed investor funds and either disappeared or have gone under. And we've got investors who have borrowed funds who have, disappeared and gone under. Like to me, this all becomes what do we stand for?
Hmm.
And if we have integrity and if we're making decisions with the interest of helping people and creating wealth and prosperity and a high quality of living for everyone, to me, I mean, maybe my rose colored glasses, but I just go, so much of this would have been solved with a little more integrity.
Yeah, and I really feel that the government did have to get involved in some of that because it did not look pretty, and it got into the media, and anyone involved in real estate, it was like a black plague on their patch of some sort. Um, yeah, maybe a few people got greedy, and they need to be. You would think that they could self-regulate. So the
Yeah.
question remains: does government need to regulate these people, or is there a regulation within their association that can be done?
Well, I honestly think if we are finding and rewarding people with integrity, people who are looking at this and going, how can I help the situation? How can I provide more housing in a way that creates a benefit for everyone? To
Hmm.
me, that is part of becoming the solution. How can we, create more communities of tiny homes? How can we, help people with home ownership? And if we're focused on solving problems that other Canadians are encountering, I feel like the energy around that is better. And I don't know, maybe it's because I believe a little bit in karma, perhaps, but we've become, as a society, we've become so focused on money. Yes, we need to make money,
Mhm.
but at some point, like, how much money is enough? Does that
That's a
make
good
sense? Like,
point.
I
How
don't
much
want to
money is
make
enough? Yes.
money for me at the detriment of someone else. I
Hmm.
don't want someone else to be penalized or punished or to be, I don't want to be punitive because my pursuit is to make money.
Yeah, you've posed some good questions there. How much is enough? And you also touched upon the housing crisis, which I don't think the news touches upon that enough because there's not much changes going along with it. I mean, maybe the government is doing the build homes better, faster, build 23 and all that, but overall, can you elaborate on the housing crisis that we're in right now?
I can. And again, I'm by no means an expert. Like, these are my opinions
Yep,
from, 20
from your
years
perspective, and your
as
perspective
a
is pretty.
smaller landlord and a property manager and working with, hundreds of investors across the country. But I feel like small landlords provide such a large percentage of the housing stock. And to keep expecting them to bear the brunt of the bad, landlord tenant
Yeah.
laws and the increases in expenses that, they are 100% responsible for, and dealing with the bad tenants and having people in your units for months and months and months before you can get them out. I mean, at some point, this part of the population will just bow and say, you know what, if the government does such a great job at providing housing, because a lot of, tenant advocates, that's what they want the government to provide housing. If
Hmm.
they do such a good job, why is the number one worst housing provider Toronto Community Housing?
Yeah. Yeah.
Like, that's what you're asking for. If you put the burden of all of this on the backs of small landlords, eventually they're just going to crack and leave
Of
because
course.
there's no benefits there.
And there's a
There's no
reason
benefit.
why. There's a reason why few are building. I mean, most developers aren't building the high interest rate, but also the just the landlord tenant board. As you say, one person doesn't pay. It's easily because they know the information. They're all aware of it because of the internet online. It's easily between $15,000 to $20,000 loss, and you're not getting that back. It's lost
Yeah.
revenue right there, and that could be detrimental, especially if it's small homeowners, small landlords as well. So, what are the opportunities in this? What can someone like us or some investors do to minimize that risk?
Well, there's a few things. So in the past, as an educator, I have always suggested that people use corporations and a corporate structure to buy real estate. But now the
Mm,
new edict from the government is, hey, guess what? If you buy in a corporate name, the 66% tax on capital gains is instantaneous. Like, it's from zero to whatever. Whereas if you buy in your personal name, then it doesn't start till after 250, is my understanding.
mhm.
So then you go, if one of the primary reasons we buy in corporations is because we want this liability protection, then it turns around and you go, okay, stop buying in corporations. Increase your insurance so that you have, you're carrying $5 million in liability protection on the insurance side. Don't buy in corporations anymore. And maybe we just need to think smaller for a little while. And it's, buy one or two properties, instead of going after the big multis,
Yeah,
because it's going to become harder to sell because
yeah,
people aren't going to want to buy.
yeah.
You'll need to hold on to a building longer in order to make enough money for it to be worthwhile.
I'm thinking with this new budget, there's be less people selling, and the
Hmm.
name of the game now is more cash flow. And
Yeah.
there's less reasons to sell because you're going to get dinged heavily. So might as well just have cash flow.
Yeah. Refinance and
Yeah.
just hang on to it for generations. But the challenge too is there's very little reason to do renovations. because we're seeing
Mm,
right now in the financing space that it is incredibly difficult to refinance and pull your money back out after
yeah.
you have improved the quality of units. And I don't know who the government's talking to when they bring in all these changes. Like, you look at things collectively across the board and you're like, do you guys see the bigger picture at all? Do
Yeah.
you understand what you are fundamentally doing to landlords who provide the vast majority of housing, rental housing in at least Ontario, if not Canada?
Yeah, it's not a good sign. It's yeah, so so with
The
these
back,
changes provide opportunities. So what are the
yes.
opportunities?
So the way I see it right now, if I was a small landlord or small investor, I would probably be looking at buying smaller projects
Mhm.
so that I would kind of fall under. I would be looking at probably, I mean, I'm going to talk to my lawyer, I'm going to talk to my accountant, but in all likelihood, I'm going to be looking for the opportunity to buy in my personal name. Quite
Yeah,
frankly, it's easier from a financing perspective.
it definitely is.
Um, I'm probably going to be looking at things like buying single family homes or duplexes to do rent to owns, for example,
Yeah.
because you can make some decent money over time. Um,
We're 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 pushing we're for our clients, we're and investors, we're pushing for basically buying a single family dwelling, putting a duplex in there, and also potentially building at the back as well. So we're looking at
yeah,
land. Land
triplex.
lots are very, very important at the moment. The size of
Hmm.
the lot, if we can actually add a third unit or fourth unit, and there's many communities, thanks to Bill 23, where they're pushing for 4 units per lot.
Yeah,
I don't know if you're aware in Kingston, where I'm at, they've been given 27 million of federal money for housing, which is great,
yeah,
but it comes with a few conditions. And those conditions is we got to put in 8 units. No, sorry, 8 bedrooms per lot. They
yeah.
got now they're pushing to 12.
Oh,
Yeah, so there's potentially 3 to 4 units per lot. I think Kitchener, Waterloo area has done it. Mississauga has already done it, and
yeah,
Kingston's in the midst of actually writing this on paper to make sure that it works in their favor. Now, I've spoken to a few urban planners. It could work very well. It could be very difficult, but either way, we're pushing for 4 units per lot and just bigger complexes. And
hmm,
the vast majority here's the vast majority of Kingsonians or people from Sally, they think they can go against this. They can fight this, but there's no fighting. This is provincial government pushing onto municipalities
yeah.
on these things. So what do you see moving forward with Bill 23 on how it's going to change the landscape in Ontario?
Honestly, and I'm trying so hard not to be negative here. Renee, I
You're a
don't,
very
I don't
positive
want your,
individual. You're very positive. Every time we speak, you're very positive. We just got bad news. It was hard. It's still very hard. We're still
we're
working
still
on it.
processing.
We're
Yeah,
processing it.
turn
Yeah.
it over. So there's a part of me that's really cynical about this. So I look
Mm,
at, for example, the whole, okay, we want people to do coach houses, we want
yeah.
people to do 3 units. And then I look at Barrie, and I had a client who at the time was poised and took action immediately, was buying properties, was putting in coach houses, getting permits for other ones. And
Mhm.
then Barrie pulled it back. They got stuck in the NIMBYism and the people who said, we don't want, our
Yes.
neighborhoods cluttered up
Yes.
with coach houses at the
Yes.
back. And they retracted everything.
Yeah.
And quite frankly, seeing what I'm seeing from the government, just because they say something today doesn't mean 6 months from now they're going to keep saying that.
Hmm.
So I get worried, the next election, who knows? They walk things back all the time, and I don't. Maybe I was just oblivious to politics when I was younger. It frustrated me because I didn't have control over it. I like to have control over everything,
Yes.
but so I didn't pay a lot of attention because I was frustrated. But I'm literally going. I don't remember ever seeing a government that said stuff and walked it back so fast.
Oh yeah, 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 yeah. Definitely, it's true. It's true. There's something. Even government has lacked integrity. I mean, word. What if your word has no essence and meaning
Yeah,
and weight to it? What have you got? You got nothing. And right now, it seems like there's less and less substance on words. That's unfortunate. So
yeah,
yeah, we're trying
and
to keep a positive note on this one. but it's
Yeah,
challenging.
and just to throw one more sort of like
Yeah.
icing on the poop cake. Um, you look at, just because we have the politicians and the government saying, yeah, yes, triplexes, yes, go ahead and do this, yes, you can build this. What I'm still seeing from a financing perspective is they won't take it into account. They
Mm,
don't want to see the separate structures. They don't want to see two separate structures on
yeah.
one lot with one PID. And so
You
you
got to
can
be
put the money
creative.
in.
I agree with exactly what you're saying. I agree exactly. You've got to be very creative and work with the right team, because I've seen people who have bought things and the city at the end said no, it didn't work out, and you got to fight it. But it's important to have the right individuals in the team. That's my suggestions for anyone looking to build a coach house or ADU, because I see it coming. It's needed, and to increase density, it seems to be the only way. And unfortunately, it's not a way that I would like to live. I would not like to live in. I live in a condo now because it's we've got bylaws that go above what the city says,
Yeah.
and it's a standard of living. And I wouldn't want, even the duplexes and the triplexes that we own, the bickering that occurs over the smallest things,
Oh,
who's cutting the
yeah,
lawn, who parking spots. I mean, most often it's okay, but there's a few that just don't get along. So I can only imagine with 4 units, it's going to be insane. It's going to be
it is.
insane. Still
So
opportunities, still opportunities.
I think opportunities are looking for places where you can have 3 units all in the one structure. So
Yes,
not going
yes,
the coach house route, but going the, okay, I'm going to take a single
yeah,
family home and it's large enough that I can have like a top, a middle, and a bottom floor.
yeah.
Or it's large enough that I can take the, first and second floor, split them vertically, and then have a third unit
Mm.
in the basement. Because when it's all in the one building envelope, then you can get the financing.
Yes.
But when you have the separate structure, that's where it's really hard to get any money back out.
Or sometimes I'm seeing opportunities where it's basically you buy something that's on a small little house built in the early 50s, nice lot, you tear it down, you build something big and easy,
Yep.
and then you're down the road. You got to be working with the right team and have good creative financing, and private money definitely plays a role in that,
Yes.
because we are in a housing crisis and it's not going away. I don't see it going
No.
away in the next 5-10 years. It'll be very tight, which is good for banks, good for landlords, good for investors. So, what other opportunities are you seeing in the market
So, opportunities in the market.
for investors who passive investors, those passive investors, those who have funds maybe in their RSPs or HELOCs, they missed the boat 2-3 years ago, and now they're
Mm,
thinking, you know what, maybe I want to get involved in real estate now. There's still plenty of opportunities for them, are they not?
absolutely. And to be honest, my favorite strategy right now is rent to owns. There is just so much opportunity. The ideal scenario for a rent to own is you buy in a buyer's market and you sell it to the tenant buyer in a seller's market.
Mm.
And quite frankly, we've got to be, I think we're kind of close-ish to the bottom. And my prediction is 3 or 4 years from now, we're going to be back into a seller's market.
Oh yeah, yeah, definitely. I mean, you know what? People talk about interest rates. I say, you know what? It's going to go up, and then what? It's going to go down, and then it's going to go up. It's going to go. It just there's constant change on it. So yes, there's a slump right now, and in 5 years it'll change. So let's take that perspective. This is the good time to be buying. I'm seeing tons of people buying. Our clients are buying good opportunities that down the road will increase value substantially because they are adding on value through secondary suites or triplexes. I like the idea of just tearing down the building and building on
Yeah.
a big piece of lot.
There's something to be said for a nice new building, right? Like, as
There
someone
is.
who owns buildings that are, 80 to 100 years old, let me tell you, the repairs and maintenance, you look at a pipe and it goes, oh heck no, I'm out of here.
Yeah,
And it
yeah,
goes,
yeah. Yeah,
and
yeah, yeah.
that's it. You got water everywhere.
Oddly enough, it's the things you don't touch that fail in a year or two, and it's like, oh, we should have just fixed it when we were there. So yeah, it's so common. So rent to
Yeah,
own seems like a great opportunity because yeah, I feel
it's
we're
fantastic.
really we're really in a buyer's market. The buyer has a lot more say than before, and it's a great time to buy. And plus, as you mentioned, um, the rents are very high, so
Yeah.
it's in the best interest to jump into rent to own for a lot of people. It gives them an opportunity to
Mhm,
then buy the property in three years or so. My
mhm.
question is, what is the percentage of people who do get into buy rent to own and actually buy the property after 3 years or so?
Well, it depends on who the rent to own provider is. So there's some caveats that need to be put in place. If you are a tenant buyer, you want to make sure that your rent to own provider has some sort of education and support program available to
Mm,
you, because most people end up in situations where they might not know or understand how to budget, how to make financial decisions. So the most successful companies have an education, a financial education component as part of their program.
very
They
important.
also do a really good job at the beginning in terms of looking at the tenant buyer. Unfortunately, rent to own got a really bad reputation for a number of years there because people were making more money when the tenant buyer didn't buy. So they just kick them out of the house and start the rent to own process all over again. But
Mm,
they didn't have any of the closing costs. They had a new future valuation and they kept all the money from the tenant buyers, from the previous tenant buyers.
okay.
So you want to make sure you're working with someone who does proper due diligence. Has your credit been looked at by a mortgage broker? Do you have recommendations in your hand that say, these are the things that I need to work on over the next 3 or 4 years? And if I do them, assuming financing is relatively, the qualifications are relatively stable compared to where they are now, then yes, I can be reasonably confident that I'll be able to buy this home at the end. In my experience as a rent to own provider, most of the rent to owns that fail is for things that are beyond my control. So usually
Mm,
it's relationship breakdown, it's job loss, or it's illness. Those are the three reasons why my rent to owns have failed. It's not been because I haven't provided education
yeah.
and support and information. It's because the tenant buyer has made decisions that has impacted their qualifying at the end.
What about the passive investor? What can be detrimental to them if the buyer or the tenant doesn't actually buy the place?
So the way most contracts are written, then the investor has the option to decide what they want to do with the house. Now, the nice thing again about rent to owns is there's multiple exit strategies. So if your
Mm,
tenant buyer doesn't buy, you can, list the house for sale in its current condition. You can typically do some, relatively minor upgrades, renovations, and list at, the improved condition. And, maybe you spend 30 or 40 or sorry, 20 or 30,000 on renovations, paint the kitchen, backsplash, new flooring, those kinds of things. But then you should get double that money back out again.
mhm. Are you
You
seeing an
could re-rent to
increase?
own it.
Are you seeing an increase of rent to own, a demand for it now that we've hit a
Yes.
recession?
Yep. Yep,
Okay.
I spoke to a lady yesterday on the phone. The crazy thing about rent to owns right now, or the crazy thing about prices in Canada right now in general. So this woman that I spoke to yesterday, she was a lovely woman, sweetest thing.
Mhm.
She has a house right now, and it's worth over 1 million. I think it was 1.1 or 1.2
Okay.
million. And in order to qualify for the mortgage, it took five people, five incomes to be able to
Oof.
qualify for the mortgage to be able to keep the house. And then there was just, I listened to her talk and there was just some financial decisions that I would not have made. She was off ill from work and she was doing renovations at that time. So she ended up in a situation where she's got multiple mortgages. She took money out, took equity out of the house in the
Okay.
form of a mortgage, used that to fund the renovations, and now she's at a situation where the third mortgage holder doesn't want to renew the mortgage. They want their money back. And she can't find anyone to replace them.
So it's her own
So,
house, and she's got to jump into the rent to own system.
yeah, yeah, she wants to keep her house, but I mean, we're talking about a $1.2 million house. Like that's a significant amount of qualifying, considering, in the last few years, our buying power has decreased. So when I started doing rent owns in 2008, I would take the household income and I'd multiply it by five, and that was their
Mm,
buying power, assuming they didn't have, a lot of debts and car payments and that kind of stuff. Now I'm taking the household income and I'm multiplying it by four. So our
mhm.
buying power
Yes.
dropped 20%. Meanwhile, the price of homes has skyrocketed.
Hmm. Yeah. Yeah. That's very challenging. That's very challenging. So
Mhm.
what do
So
you see? What do you see moving forward in the next 5, 10 years? Like, what's the worst that can happen in Canada overall in Southern Ontario, where you see it going? What is it going to look like in 5, 10 years? Is it going to be like a lot more ADUs and coach houses at the back all over municipalities? Will there be a lot more people living on the streets? Will the housing crisis be done with? Are we still going to be heavily taxed, and there's just going to be less rich people or wealthy people in Canada will just be wanting to leave? How's it going to look like? Like we're really making a shift to something that's going to look not as pretty, but obviously there's going to be advantages. Great country to be in. But what's it going to look like in 5 years? What's your prediction on Southern Ontario in the next 5 years as a real estate investor?
Hmm. Renee, you ask these tough questions.
Only for you, Elizabeth, because I know, because you're very knowledgeable. You speak to a lot of people, and you're informed on a lot of certain things. Plus, you've been doing this for so many years as well, like 20 years or so. So I saved these questions for you.
Thanks.
You can always dodge the question by just giving me an answer. You're gonna walk your dog more often in 5, 10 years and it'll be out of my control. I'll just walk away from all this.
I definitely think the density is going to increase because we are just in a housing shortage.
Yep.
I don't see the government making, I mean, initially the reduction or waiving of development fees seemed really good, and then that got walked back.
Yeah.
So I don't see a lot of brand new supply being created. I see people wanting to live in it because, quite frankly, our infrastructure is aging. Our homes are aging, and they're not aging well. Plumbing leaks and those kinds of things, sewer backups, like those are becoming increasingly prevalent. So I can see it being challenging, and I can see the gap between those who rent and those who own opening up significantly.
Oh, yes, good point. Very good point.
Like the people who have managed to own right now, I think we need to be trying to own as much as we can.
That's a very good point. I think that what's the number now? Was it 65% of our owners in Canada, or
It
maybe
could be.
Ontario?
I haven't seen that
Yeah,
figure
yeah.
recently, but you look at the investments, and I'll be honest, it's getting harder to make money in Canada. It's getting harder to plan for our retirement, to save money for our future, and the cost of everything is going up.
Hmm.
So if people aren't homeowners, they are definitely, by the time they reach retirement, they're definitely going to be in a detrimental situation. I look at my in-laws, and my in-laws, lovely people, worked hard all of their lives, and they were very, very resistant to being on the housing list, the seniors housing list. And all of a sudden they got to a point where they really couldn't safely stay in their home anymore. We had no choice but to go with a private, and for the level of care that I think they're going to need in the future, we're looking at 10 grand a month.
10 grand a month for the couple.
10 grand a month.
So 5,000 each. That's substantial. How old are they?
They're 85 now. So
Yeah.
we just moved them to a seniors home in February. So right now it's $7,500 for a one
Wow.
bedroom apartment
And
in
and
the home.
and this is a waiting list as well. So there's a
Well,
shortage
so
of
this is the thing. There's a waiting list for the low cost options. So the options where you're paying $2,800 a month, those are the places where there's waiting lists.
yeah.
They could walk into the home, and as long as you're willing to pay the $7,500 or the $10,000 a month, there are spots available. But this is what I mean about the gap opening up between the people who have money and the people who don't.
Mm.
And you think, okay, if you buy a house and you pay off your house with the idea that when I retire or when I get older, I'm going to sell my house and I'm going to live off of that money, which is the
Yep.
dream that a lot of Canadians for a lot of years have had. Okay, so at $10,000 a month, you sell your house for $1 million.
It doesn't go very far.
It doesn't go very far anymore.
Yeah.
Now imagine you're a senior and you suddenly have a health issue and you aren't on the list. You get a sudden
Mm.
diagnosis, you are not on the list. You can't wait 4 years for a place to open up in one of the subsidized facilities. Now what happens to you?
So how can people prepare for this? Because eventually we're all in that row. Hopefully, we're all going to reach 80, 85, 90, hopefully in good health. What can we do to prepare for that? Just to kind of close this on a optimistic note on what we can do, because there's a lot we have control over, a lot we don't have control over, what we can control, and what can we do now to prepare for this retirement.
Well, I think we have to be very focused on there doesn't have to be a certain number of units to be considered an investor. You don't have to own a
Yeah,
hundred
yes.
units to dramatically change your future. You can buy one or two properties a year and hold
Mhm.
on to them for 10, 15, 20 years and significantly change
Yeah,
the future for your family. And
good
I think
point.
that's what we have to do because I think in the future, the people who own versus the people who don't, that gap will open. So we need to own.
That's a very good point. I'm seeing more and more people who the idea of owning 20 houses anymore, it doesn't make any sense. Own five, cash flow's nice, they're well
Yeah.
taken care of. There's no headaches, and you live off, and then you ride, you put in the time into that, and the next 15, 20 years, you sell them when you want to retire. I think that's very smart as well.
Yeah. And there's a lot of over the last few years, there's been a lot of like OPM and, have no money in in the deal, high
Mm.
leverage stuff. And if this market has taught investors anything, hopefully it's taught you the benefits of not being, 100 and 125% leveraged on your properties.
Mm.
When you're thinking about retiring, you want to pay your mortgage down. You want to keep things simple and you want to generate cash flow.
Cash flow it is. Cash flow is king. I think with that ends it off on a good note, I think. What do
I hope so. You might have to edit out the first part of our conversation because it's like, where did you guys
No,
go?
no.
That wasn't where I saw it going.
I mean, we had to get that off our chest because really it was getting to us, and I'm glad we did. And because we are very optimistic people, and ultimately, I like the idea that change or provides opportunities,
It
and if
does.
anything, we have a lot of control over our future, and we know this. It's just sometimes
Mhm.
we got kind of complain about the government, and not have control over it, but we have a lot of control over it. So can we kind of sum it up by saying what are the three things we can do as investors to have control over our destiny on our future financial freedom?
Slow, steady, simple.
Ah, love it. Slow, steady, simple. Hey, that sounds like a title.
Okay.
All right. Thank you, Elizabeth. So people want to reach out to you, where can they find you?
Elizabeth Kelly Consulting. You can find me on Instagram. You can find me on Facebook. My website is ekconsulting.ca. I'm not hard to find, I promise. And I'll be at Multifamily Conference about, I guess, about a month now, eh? Yeah, about a
Oh
month.
yeah. Sounds good. Sounds good. Thank you very much, Elizabeth. That was lovely. That was lovely. We retained a smile at
Thank
the end.
you.
Okay. Bye-bye.
Thanks, Renee.